Hello traders, you're welcome to this video. In this video, we are going to be looking at the best 1 minute setting for the stochastic oscillator. So if you are a scalper who want to use the stochastic oscillators, then you might want to stick to the end of this video as we look at the best settings for the 1 minute charts using the stochastic oscillators. So basically for 1 minute chart scalping, the stochastic oscillator can be a powerful tool to catch quick, small price movements, helping you get in and out of trades at the right moments. Okay, so we're just going to be looking at how to set up the stochastic oscillator for optimal results. We're going to start by adding the stochastic to our chart. Now, as for the percentage K period, considering the fact that we are scalping on the 1 minute time frame, we're going to be changing this to 5. This is the look back period for the oscillator. A shorter percentage K period makes the stochastic more sensitive. That's the reason why we are reducing it to 5, okay, so that we can get a higher sensitivity to recent price changes. And this is ideal for rapid movements in 1 minute charts, okay. Now, as for the percentage D, we're going to be setting it to 3, okay. This is the moving average of the percentage K line. Keeping this at 3 helps smooth out the percentage K, making it easier to see crossovers and potential trade signals. Now, as for the slowing, we're going to leave it at 3. Okay, this adds a bit more smoothing to the percentage K line, preventing it from being too jumpy and reducing false signals in a fast-paced environment. Okay, now as for the levels, we're just going to leave the overbought level to 80. When the oscillator reaches 80 or above, the market is considered overbought, signaling a potential reversal or pullback. And then for the oversold, we're going to leave it at 20. A reading of 20 or below indicates that the market is oversold, suggesting a potential buying opportunity as price may rebound. Okay, so we're just going to add this to our chart. You can see this is the 1 minute chart. Okay, now how do you use the stochastic oscillator for scalping? Okay, now one is the crossover strategy. You just want to look out for when the main line crosses above the signal line, or the percentage K line crosses above the percentage D line in the oversold area that is below 20, as it happened around here, for potential buy signals. When that crossover happens, it is a buy signal. Okay, and the percentage K line crossing below the percentage D line in overbought area for sell signal. So when you have this crossover happening in the overbought, it gives a sell signal. Okay, so now in the case of we having a buy signal, let us use this as an example. Let's use this as an example. Now we had a buy signal around here, so it's important that you also watch out for candlestick patterns, okay, to confirm that signal, because we can see that around here we actually had a buy signal, and then just shortly after this first bullish candle formed, we had a bearish doji forming here. So it would have been a bad time to buy, okay. But in this case, after we had this doji form and this doji form, and we had the first bullish candle form, the second candle was already going in the bullish direction, so we would have considered entering a buy around here, okay. And it's also important to use support and resistance levels for additional confirmation as well, and you can also use other indicators to also confirm your entries and exits. So as we enter a buy trade, perhaps around here we could have considered exiting at the nearest resistance level, okay. Or if we want to target a higher resistance, just make sure you have good risk to reward ratio, okay. It's very important to confirm with price action. Confirm your entries and your exits with price action, okay. Combine the stochastics indicator with price action, like support and resistance levels, candlestick patterns, to confirm your entries. This prevents over reliance on the indicator alone, okay. And then in terms of divergence, you can also use the stochastic oscillator to find divergence, okay. That occurs when price is moving in one direction while the stochastic is moving in the opposite direction. It signals a possible trend reversal, although it may not always show up in the market, but if you happen to find such situation that the price is perhaps making higher lows and the stochastic is making lower lows, okay, you might watch out for such situations. It's called a divergence, and it can indicate a possible reversal. So this strategy is for scalpers, and you would want to make sure that you do not stay in a trade for too long, because as a scalper you want to catch a lot of quick price movements. So just be watching out for the oscillator. When it enters overbought region, consider exiting your buy trade. If you are in a sell trade, when it enters oversold region, consider exiting your sell trade. Okay, and then if you are in a trend, if you are trading a trending market, if it is a trending market that you are trading, then sometimes if the trend is too strong, the oscillator might enter. For example, if it's a bullish trend, the oscillator might enter the overbought region, but the trend will keep on going up, just like we can see here, overbought, 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 but we still had continuous upward movement. So if you're trading a strong trending market, then the overbought and oversold regions might become unreliable. Okay, so in such situation, you just want to add on perhaps trend lines, or other indicators that can just indicate when the trend is probably coming to an end. Like for example, in this strong upward trend, we can see that a breakout occurred around here. So we would have considered using this as our exit signal for our buy, because had it been we are using overbought levels, then we would have left a lot of money on the table, because the trend was quite strong. Okay, so in such situations you can consider using trend lines, using perhaps moving averages as well, to confirm when the trend is probably reversing. Okay, when a breakout against the trend happens. All right, so basically that is it for this strategy. I hope you found this video insightful. Kindly like and subscribe for more trading insights, and don't forget to hit the notification bell so that you don't miss out on more trading updates. Thanks for watching. Happy trading.